Hi, everyone. Welcome to Market Insight for the week of April 1 through the 5th, 2024. So starting with our monthly chart, we have 5 months up in a row. Very strong bullish run here. You can see that we've broken resistance and we've overshot the supply line. Our resistance here, the 48.08 all-time highs that were set in 2021 and early 2022, and tested in 2020, almost tested in 2023. Yeah, 2023 pushed through, and now we are decisively through that. So we've broken resistance, and we're high up in the trend channel. We've overshot the supply line here. So although we can have a pullback anytime because we are so high up in the trend channel, we don't see any significant supply here, right? So any pullback is not going to be anything significant, at least not on the monthly chart. Let's turn to the weekly. Same thing here on the weekly. We are high in the trend channel and vulnerable to a pullback. But again, there's no real supply present. Now, I say we're vulnerable to a pullback because we're in oversold territory, both in the weekly and the monthly charts. Also, it tends to the pension funds and the IRA funds tend to send money into the firms the last week or so of the prior month, and then there's a sort of a deficit of new money coming in during the first week or so of the new month. So that's a good time for the market, typical time for the market to pull back, just sort of a behavioral characteristic that we see during the first week or so, the new month. So for those reasons, we might be vulnerable, but really, again, we don't really see supply up here. Turning to the daily, we see nicely well-behaved uptrend, trend run to the upside, stair-stepping nicely up here, breaking resistance, and then holding it as support all the way up. This just reflects a very strong trend run to the upside. And as with the weekly and the monthly charts, we are high up here in the channel structure on the daily chart. So we'll circle back to the daily to look at what's up on tap for next week. But let's take a look at the major markets and a little bit more. I'm going to take a look at the higher time frames and the point and figure as well. But first, let's take a look at the major markets. Just a quick look here. Again, major markets all three show bullishness, bullish trending conditions. And again, nothing obviously negative here. We're seeing the Dow and the Nas a little bit less, not quite as high as the S&Ps. Not really significant, just potential pullback there. All right, so I'd like to take a look at the higher time frames next, the yearly and the quarterly. And let's do that. Now, this is the cash index because it's hard to do the very high time frames on the futures because of rollover. So the first quarter ended on Thursday, so this is a timely opportunity to check out the higher time frames. So we have the yearly SPX on the left, we have the quarterly in the middle, and then the monthly on the right. And again, all three are the cash index. So we see the yearly is breaking above the resistance of the last 3 years high, 2021, 2022, and then last year, 2023. All of them had highs around the 48.08 level, give or take, and we broke that resistance quite decisively this quarter, as we can see. So the quarterly shows nice bullish price action. It had come down to its halfway point, held that very nicely, the halfway point from the COVID low to the high in 2021, and then the pullback, and then we're pushing up from there, breaking up above that 48.08 level and rallying nicely and closing firm for this quarter. So this chart closed on Thursday very bullish with, again, no supply in sight. Now, as the quarterly pulled back to its halfway point in 2021 and early 2022, we see that the lows of this pullback are highlighted in this green area on the monthly chart. Now, this is the accumulation area. We've discussed extensively over the past months, and price is now in a markup from that accumulation structure. So let's take a look at this on the point and figure chart. So here we are in the point and figure chart, just to orient ourselves. I'll come back and talk about this in a moment, but this is the area here of the accumulation structure. The lows that were put in, and then an intermediate high. And if we go back up to the monthly chart here, these are the lows that were put in, then that intermediate high before the markup. So you can see that this green area is the same area as this area right here on the point and figure chart. So this point and figure chart's a little bit bigger than what we usually use. This is a 100 by 1 point and figure chart based on daily highs and lows. So a little bit more conservative, a little bit more of a higher time frame kind of a point and figure chart. And you can see how nicely this chart highlights the accumulation structure along the 3900 line right here. And there are 20 figures along that 3900 line, leading to projections of 5,500 conservatively. That would be, we take 20 times 100, that's 2,000. Add it to 3,500, the low, that brings us to 5,500 projection. We can also add it to the outline here, the 3,900, and that brings us up to 5,900. But 5,500 is the conservative count. So that's from that point and figure chart. We can also go to the point and figure chart we typically use. This one's a little bit more detailed. This is the 50 by 1 point and figure chart. So each box or each figure is worth 50 points, not 100. And it's based off of the 60-minute highs and lows. So more figures here compared to the daily highs. A little bit more of a refined chart, a little bit more detail, a little bit more of a lower time frame chart. And Wyckoff liked combining the lower time frames and the higher time frame charts. He used a 1 by 1 and a 3 by 1. And we could use a 3 by 1 too, but I'm just using the 1 by 1 with daily. It's just how I do it. Anyway, when he used them and they both coincided, he saw that as confirmation. So we can see here that we do have coincidence in a couple of ways. Our original count on this point and figure chart, which has held us in good stead here, brought us up to 4850 to 5100, actually 4350 initially. We've been using this count for quite some time. That 4300 broke. And then the 4850 level broke, and then now the 5100 level broke. So because of that, we can go to a larger count size. And then we do that by coming up to the last point of support, which on this chart is on the 3800 line. Okay, and we can take that line and make the counts here. And then that projects up to between 5,200, which we are right at the moment, and 5,500, assuming we are going to break that level and go to the 5,500 level. Also, we have a stepping stone confirmation count here. This originally confirmed the run up to 5,100 to this level, but we can extend that now. And there are now 28 figures, and that brings us up to 5,500. So on the three charts here, or the two charts and the three counts that we have on the smaller time frame a count up to 5,500. That's confirmed with a stepping stone count. And then on our slightly larger time frame on the 100 by 1 based off of daily highs and lows. We also have that count up. We have the conservative count up to 5,500. So that becomes our good target for us, assuming that we continue to move along. I'm a little bit premature here because we haven't quite taken out the 5250 level. Technically, we're at that level, but I'm assuming that we are going to, since we don't see any real supply in this market, that we will eventually take that out and continue to move on higher. All right, so let's circle back now to the daily chart and see what's on tap for early next week. So Thursday ended with a narrow range day, so we may see some pullback. We're vulnerable to a pullback, right? We're at resistance and we're vulnerable to a pullback. But we're also in a pretty strong bullish trend run. And so we could push up higher from here. Now early next week, watch the 5,300 level down to 5,284. 5,284 is this high here, and 5,300 is just a little bit higher up. You'll see on the intraday charts that 5,300 has been an area of support, as has 52. So this is a key area. And if the market is going to rally higher right off, right, then this level is likely to hold early next week on Monday or Tuesday. Be aware, though, that you know how the market likes to operate, right? We could see a flush down, say on Monday. If the market decides to flush, where would it go? Well, maybe around 52.85, about halfway into this rally area here. And if 52.85 holds, we get a flush down and then rally back up. Potentially good long setup might occur with the flush down to 52.85 area, give or take. It might not go all the way down there. It might only get to 52.90 or something. But a good flush down, an ordinary shakeout, then a rally back up through 52.94 and up to 5,300 and kind of recover back up to that level and then set up a good long there, right? That would indicate lack of supply down low at lower levels, and come back up and recover to the support we've been seeing, and then we could easily see a retest of 53.22, the all-time highs, and likely head higher next week if that were to occur. Now, on the other hand, if the market doesn't just flush and down and hold, and it can't, if it goes down farther and it can't hold 5,300 and it fails to hold around 52.85, in that case, most likely the market needs to fill out the trading range a little bit more. Maybe it's a little too premature for it to head right on up now. Maybe I'm reading it a little bit too, it's a little bit too bullish. So in that case, and that's fine. In that case, we're likely to see, the market fill out the range between the 53.22 all-time highs and this 52.53 level, likely a little bit lower, maybe down to around 53.40, on these highs down in here. But the idea being that if it can't hold in here and then start pushing up, then likely it needs to fill out a little bit more before it then heads on up. So we're going to have a free webinar on Monday. I'll talk a little bit more about that. And I'm going to talk a little bit more about how I'm thinking about this. And I'll bring in the 240-minute chart to see how that fits into this analysis. And you'll see a little bit more clearly what I'm thinking about. So for next week, as I say, we'll have a free webinar on Monday, and I'm going to detail or discuss in more detail how I'm looking at the potential price action from Monday and how I'm using the 240-minute chart. So Monday will actually have occurred, the trading will have occurred on Monday. So we'll be able to see how the 240-minute fits into that. So it'd be good for you to see that and be fun to see. It'll be fun to learn that. We've got a full week next week. We're going to have deep practice again on Tuesday, on the 2nd at 8 o'clock, and then on Thursday. So we're going to have 2 deep practices next week. And that's because I'm going to have to be away for the last part of April. And we're going to fit all of our deep practices in, or some of them in, before I go, so that you're not, I'm going to be away for a few weeks, so that you've got some deep practice to study and work through. So that's it for me this weekend. Have a great rest of the weekend and a good trading week. And I'll see you on Monday at 5 o'clock Eastern time for that free webinar. All right, everyone, take care. Bye-bye.